Hey everybody, good morning. Right now it is the 20th of July 2022. It's about 10:20 in the morning. We had a good trade on Amazon, and I'd like to do just a real quick session just on rolling, how you take a roll when you are playing options. And so before we get into this, you all know this is not financial advice. I'm not your financial advisor. You're responsible for your own trades, managing your own risk, doing your own research, and I'm just kind of giving my opinion on just the way that I trade here. So I'm going to move on into the chart and take a look here. I've got Amazon on here. First off, anytime that you are wanting to play options, generally speaking, most of the time, you're going to hear people talking about levels and key levels and why those are important. So first off, I just want to kind of like point out, we've got some levels here in higher time frames. So we've got on the 4 hour, we've got an important level here, mostly created by this gap down, but we can see that there is some price acceptance at this level. The next one is going to be this level right here that we've identified based on this high, and this high over here. Then we've got another level that we've put in here at about 121, and anywhere between 121, 122, somewhere in this area, mostly created by the support from back here in the end of May, beginning of June. We can see that there is some support that was created here. Another intermediate level right here, about 124, again created by this same cluster. And then we've got a high right here at about 128.82, 129, somewhere in that area. Likely this could be moved up here to approximately 130.08, but I tend to believe that right down here, about that 129 level, that's likely going to be where this resistance is going to be. And resistance in an uptrend is areas where you should be looking to be taking profits. What I want to talk about is, the trade that we took today, in addition to the trade that was taken yesterday, and how this all kind of, works itself out. So first off, yesterday we were in a 118 call. We got into that 118 call at about 12:30 in the afternoon. So that would have been, let me pull this back here, about right here. It was about 12:30 in the afternoon. We broke through this level here at about 117. So we broke through a level. We took a trade right here. We got into the 118 call at about 158. Okay, so we were able to profit on that. We closed out a half the position at about 151, which would have been about, it was actually right here. We took profit on that. So again, we got in at 158. We closed half of that trade at 231, and then we got out of the trade completely at about 2:30 in the afternoon, which was here where we saw it was starting to roll over. So we were still able to close that out at $2, which again, we got into it at 158. We closed half of it at 231, and then we closed the rest of it at $2. So all in all, that was a very profitable trade. Now, I want to talk a little bit about what happened today, because we got into a trade today. So what happened at the open? Well, okay, so first off, this is where we took our most significant profit on that 118 call yesterday. And so I'm using that as a key intraday level, and we extend that out, and we saw that we were kind of creeping up into that level yesterday at the close with an increased amount of volume, which is what you would expect to see at the end of the day. And we opened above that key level. We did a gap fill, and it was just immediately absorbed, and we saw a nice price action, a nice move off of that key level. So that is the reason why we decided to take the 120 call, and we got that at about $1.20. So I want to talk again about the importance of rolls. So we were profiting yesterday off of that 118 call. And so let's say you take $4,000 positions. Well, you profited off of that. You made a decent amount of money on that. I'm not going to do the math on the 118. I am going to do the math, however, on the 120 and the 121. So let's just talk about this for a moment. You get the 120 call, and let's say you put $2,000 into a position. So you're able to get 16 contracts at 120 apiece, which equates out to $1,920. Okay, so let me just put this on here just for illustrative purposes. So we've got a $2,000 position. So you have 16 contracts at $1.20, and that equals to $1,920. that you have put into this position. Then we see we have a nice big move up. We've got this key level here at about 120, 121. We're approaching that level. And so what we decide to do is we decide to take a little bit of profit as we're approaching this level, because we could get a rejection at any time. So we were able to sell half of this at $1.75. So we are now selling 8 contracts. All right, we're selling 8 contracts, and we're selling them at 175, which equates out to $1,400 that we are reclaiming. Now keep in mind, we started with a $1,920 position, and now we're basically selling $1,400. So now we're only in this trade for about 500 bucks. All right. So then what do? All right, so we see the price continuing to go up. We're getting close to this key level. It still looks strong. So we're going to actually decide to roll into another trade. Now, keeping in mind, we still have $500 in the 120 call. But what we're going to do is, instead of putting $2,000 in, we're going to cut that in half. We're actually going to only put $1,000 into this trade. So instead of, let me fix this here. So instead of getting 16 contracts, right, we're only able to purchase 7 contracts at $1.33, which equates to about $931. All right, so I'm going to try and keep this as clear and concise as possible. So we're buying 7 contracts at $1.33 for $931, which is, basically half of what it's a little less than half of what we initially put into this 120 call. Now that's important, because at some point your rolls are going to fail. And so we saw, we started to see a little bit of a pullback here. So what did we do? We decided to sell, I'm going to put this down here. We decided to sell the entirety of the 120 call at $2. So let's just talk about what this means. So we're selling the rest, which means we're selling our final 8 contracts at $2. And that means we are going to be reclaiming $1,600. All right. Remember, we put $931 into the 121 call. But let's see how much money we made off of the 120 call. All right. So we started with $1,920, and then we reclaimed $1,400, and then we reclaimed $1,600, which, that equals $3,000. And so what that basically amounts to is a profit. Our net profit is going to be $1,080. In that roll, we put in $931. So we have our profit of $1,080 on the 120 call. We put $931 into the 121 call, which means if that 121 call goes to 0, I still make about $150 minus commissions and fees. But this is why rolling can work. And so far, we can see AMD is still climbing. AMD is still climbing. We're getting a really good push up. Probably we're going to take profit on this 121 call that we're in, because it's 80 cents in the money now. So we should be looking to take profit on that. And we bought that again for $1.33, and it's almost $1 in the money at the moment. So this is also going to continue to pay, which is going to afford us the opportunity to do another roll, because our resistance to the upside isn't until 123. And again, as an options trader, if you see a key level get broken and you find good support there, well, chances are pretty good we're going to see continued movement to the next key level. Now, it doesn't always mean it's going to happen in the same day, which is why you have to decrease your position sizes every time you roll. So again, yesterday started with $8,000, and then we moved to $4,000, then $2,000, and then all the way down here to $1,000 into a trade. So the next trade probably only going to put about $500 into that trade. Now, what does that mean, right? What does that mean? Well, that means that it's a free trade. It literally is costing me nothing to be in that trade, but you still want to make sure that the trades that you are taking are high probability trades. So again, you're going to decrease every roll. You're going to cut that position in half. And yeah, that's going to hurt because sometimes these options trades just continue to just roll and roll and roll. But you have to be disciplined enough to realize that not every trade is going to continue to steamroll to the upside or to the downside if you're playing puts. But at any rate, that's the mentality that you have to have. That is how you're going to survive in this game. Levels are super important. You have to pay attention to those key levels because they don't lie. As another member on the Discord says, that's your supply and demand levels. I refer to them as key levels. They're all the same. They're all the same. They're the points where you have significant price rejection or significant price support, or for a spring, right? So you have to recognize those levels. You have to play those levels to your advantage. And again, just looking at this right now, we've got a nice intraday level that was created right here. We broke down, but we went up above it and we reclaimed that as support. These are the kinds of things that we look at all the time. And the same thing happened right here. So we had a nice area right there of resistance, decent resistance. We broke up above it. We came back and claimed it as support. Amazon looks extremely bullish right now, and I don't see any reason why you need to to be bearish on it. But also keep in mind that just because it looks bullish doesn't mean it can't flip and turn in the opposite direction at a moment's notice. You have to play the levels, you have to be willing to take profit, and you have to be willing to take smaller positions as you roll, because eventually the trade will fail. And eventually I will probably let the trade go to zero. If I do continue to roll, I may make a decision to move into 123, maybe even a 124 call on Amazon, but it's all going to be based off of the levels and the support that's created intraday, and if we do see the momentum continue to go. Right now, Amazon looks like it's close to being done. But that's all that I've got right now. I hope this helped. If this video did help you in any way, shape, or form, you know the deal. Like, subscribe, share, all that good stuff. And of course, if you're a fan of losing money, make sure not to subscribe to the channel. But if you want to continue to receive actionable information and have a path to some sort of financial freedom, make sure you hit that subscribe button. While you're at it, if you're not in our Discord trading room, we discuss market movements every single day, including this Amazon trade. This was shared with our members. You can find all that information on BitDoctor.org. So, of course, wherever you are in the world, I hope you're having a good day, a good night, and a good evening. Take care, everyone.